You're watching Master Trader Live, simple market analysis and education to help you make money in the markets. Join us live each week on YouTube and see past episodes at Master Trader Live. And now your show hosts, Greg Capra and Dan Gibby.
Hello, everybody. How's it going today? So, we're going to do something a little different. And I've been doing these MT lives for a while. And we often say, you know what, we could talk about this one chart and do a whole MT live on that. So that's what we're going to do. We'll cover some background informational stuff for those that are new. We always do that. And then we're going to focus on an actual trade setup and talk about it. And if you have questions, of course, shoot them out there. We're here to help all of you learn how to utilize the methods that we have for many, many years without indicators, without a lot of the noise, the price action, which reveals to us, as we say, what others are doing with real money, what they expect to happen, what their expectations are, what their beliefs are. And we put that together in multiple time frames. So let's get into it, Dan.
Good afternoon. And one thing I'd just like to highlight, Greg, for the benefit of what we put together today, it's not just saying, oh, we're looking at one chart. It's the beautiful thing of what we're going to accomplish is let me just go right to this slide. So this is our technical approach. We go over this slide every time. Start with a pattern. That's the starting point. I got a compelling pattern. Okay. But these other concepts make up our total approach. So it's where is that pattern in the trend? Support and resistance, multiple time frame analysis. Is it showing relative strength or weakness? Secondary, but are there any volume, moving average analysis that helps that setup? What are the broader markets doing? We'll show you how to calculate position size. We'll show you how to trail the stop, how we manage two real trades here. One, a directional stock trade, one, a put spread. But we're gonna take our time. Now, Greg and I, obviously, and many of our subscribers that have been with us for a long time, the goal is to get what psychologists call the unconscious confidence stage. So when we go over this, some people might say, oh, wow, your approach is complicated. I have to sit here and look at all these things on every trade. I'd rather just have some red light, green light system to tell me what to do. But when you get to the unconscious competence, as soon as we look at whatever your setup is at your house or laptop, as soon as you pull it up, all of these concepts are immediately internalized, and you can tell if it's a high probability setup or not. And that's what we do when we scan. We're going through setups on TC2000, and we can quickly see if something's good. But today, we're going to take them step by step for little Johnny and analyze it. We're going to say, okay, here's one of our concepts. Guys, show me in this real example how the concept set up on this particular chart. That's what we're going to do together in this next hour. So,
What the hell is that, Dan, that you're showing us?
It's the red light, green light, somebody trying to sell you a pack of goods instead of an objective technical approach. We use the word objective all the time, which means presently observable, existing in fact. This is subjective. It's they come up with indicators, oscillators, their magic fib, whatever bag of tricks they're trying to sell you, but it's all subjective on what really matters, which is price and volume and trend and support and resistance. What we're going to show you today.
I think a good analogy for the two, Dan, as those R slide and this craziness, is our focus is to teach you how to do it. yourself, self-sufficient. This noise is kind of like telling you what to do, and you don't even know why you're doing it.
Okay. Right. But if it, so we could talk for a long time on this subject, as you know. So if anybody had this magical box that was an ATM machine, do you really think they'd be selling it to the public for whatever, $500 to 5,000? Or would they take it to a hedge fund in New York that would power this thing and they would monetize this ATM machine privately through leverage instead of through BS indicator sales, snake oil salespeople?
Yeah, there wouldn't be a million different settings and all of that noise.
All right. So this is the top concept. We're going to be going through those concepts one by one in this example. These are just 9 beautiful bullish ones. Our approach applies to any time frame. So you could be trading the 15-minute chart, daily chart, weekly. Our approach applies the same on the time frame that you are trading. And then we overlay these other concepts. So this is a starting point. I think I'm going to be, well, we'll just get to it on this. So here.
Jim, let me 2 seconds on that one slide, because it's an important one where it says any condensed in the middle. And I know it was a major hurdle for myself, because as you learn patterns, there's a lot of things that can be confusing about technical analysis. Is that when you see these patterns and you say, oh, and we'll show you stuff today, it's like, wow, that's great. And you start looking specifically for that particular thing, like a bullish 180. Right? For me, I think years ago it was a bottoming tail bar. And then as you change time frames, you don't see it. And then you go to another time frame and you see it, and you start thinking you need to look at so many different time frames, which you don't. So, part of the essence of this slide is this middle thing, any condense, because as you condense information, just for that, you're condensing it. So, like the one above here, it went down and it went up. And this, it went down and it went up. And, so many different ways it went down and it went up, and it can look like different things. So it's not the part of today's thing, but when you get into retracements, you understand that retracements are a big part of understanding what's happening in multiple time frames and candlestick patterns in multiple time frames, so that you're not just so fixated with, which is what candlesticks websites and people that promote that's what they're fixated on or promoting, is that, here's this dark cloud cover or whatever else they might want to call it. And it's like, as I change the time frames, it looks like something different. And so it could look like any of these pretty much, because at some point it went down and it went up.
This is a daily chart RCL. All of our daily charts are this clean and simple. Red and green color-coded candlesticks, the 20 MA, 50, and 200, which gives us just a visual display of short, intermediate, and long-term trends, but we trade candlesticks. This is a closed trade in members area. We give all open and closed trades during market hours. We send them through Telegram. You can be anywhere in the world. We give you the stock, the date, is it a stock or option trade, the technical strategy, so wide range breakout at the 50 MA, and management in between. And this is a closed trade, made a nice swing profit on a 4-day swing trade. So, but for today's session, we would just quickly say that's a beautiful 1, 2, 3. Bullish retracement, closing breakout, price void, and then we're off to the next example. But today we're going to take it slow. So what is the bullish setup? I have a wide range breakout. Yes. And now the inside bar is this. It's a bullish 1, 2, 3 continuation pattern, which is a wide range green bar What does that mean? Well, it's a big fat green bar compared to other bars on the chart that you can see. We have an inside bar that stays in the upper third. The strategy is to buy over the high of those two bars, stop under the low, manage in between.
And then unless it was like a penny stock, big bars like that are produced by big money institutions,
Absolutely.
which suggests that, they're not going away.
All right, so let's continue because we're gonna talk about other subjects, but what's the setup? Bullish 1, 2, 3 continuation. Got it. But remember, on the other slide, we have all these other concepts. Greg's course obviously gets into all these concepts put together in a methodical thought building lesson, but we can teach little Johnny this. Hey, little Johnny, whatever time frame you're talking about, the stock or ETF or Bitcoin, whatever you're trading, is going to be in one of these phases. The setup is either going to be in an uptrend, higher pivot highs, higher pivot lows, downtrend, sideways trend, or one of these transitional phases. So we teach little Johnny what a trend is, what a trend break is, get into, transitions, and then we overlay these other concepts. So let's come back to here. What do we got here, Greg? The title says you can discuss trends, trend breaks, and where this particular setup occurred.
So that opens up the door to a lot of conversation that you may or may not want to get into, Dan, in the hour.
Right. Keep it.
Yeah. So master trader pivots. What does that mean? It's nothing proprietary. We just choose to mark our charts with these dots. And what those dots mark is that there's 3 higher lows to the left and right. And it's called a pivot. Some trading platforms call them fractals. Fancy name for a bar with, you choose how many bars to the left and right you want with higher lows, or with the top part lower highs. Through a lot of trial and error, does this work? Does that work? 1, 2, 3, 5, whatever. 3 works really well. It's a good medium, so it's 3. However, there are times where you get a bar that isn't marked as a pivot, but I don't know if there's one here. I mean, it might just stick down under some others, but it doesn't 3 to the left. Let's just put it that way. So another conversation. But anyway, what trend line people do is they connect dots. And they go, oh, it broke the trend line. It's going to go down. What happened? Well, I can't explain it to you. I mean, things happen. And so going back up. And now they start connecting new dots. And it's just a repetitive cycle that'll make you crazy. So once it violates that major support, the trend is in question, but there's times where it violates and things turn around again. So as we're looking at this, say, wow, that was like a major trend break. It just annihilated through all of this information here. That's got to go lower. And Dan says, oh yeah, little Johnny, watch this. And right back up. Why does it do that? It happens. We can get into different market environments and explain market internals and, a deeper thing. The takeaway is keep it simple in that at times things are not going to work out the way even the chart suggests. However, other concepts will save you, because even though that went all the way back up and it didn't, we knew it was going to bounce because it fell so sharply into the 200 MA here. It was likely it was going to stabilize. It didn't mean it was going to go up like it did. So retracement concepts would say, hey, you know what? Let me clean that up. Most times it would have stopped going up there. That's what we call minor. This is minor resistance after the break. And you would have gotten some pattern. You didn't get any pattern. So there's nothing to do. no harm done. So now, after it comes all the way back up, you say, well, Craig, Dan, I mean, it went all the way back up there. You guys didn't take advantage of any of that. Well, maybe we did. Could have been, call spread candidate, but not directional. But over here, as things develop, we're getting more and more information for high probability setups. I don't want to give away too much, Dan, because I don't know what you got on the next slide, but
Right.
the, the idea here is that
Well,
not
here,
only the depth of retracement,
right.
but the price action up here, which we can get into in a few more slides, I guess, suggested that buyers were in control besides the depth of retracement.
Right. And some of these slides are going to be, intertwined, but this was one of our concepts. Where did the reversal setup occur? And so this is definitions. So in an uptrend, Greg talked about these pivots, which the computer spits out just with this blue pivot low, red pivot high, means 3 or more higher lows to the left and the right. So this is a strong uptrend. I got another slide. We can talk about other setups and uptrends, but we're talking about this one. In sideways trends, 3 or more is major support, major resistance. Downtrend, these are the red dots, major pivot highs. So where did this setup occur? Answer is igniting bar from bullish consolidation with this blue dot being major support. We want all of our 1, 2, 3 setups to be from consolidation, not far from the 20. So check, it meets that. And it's as Greg said, this consolidation is another concept, this 100% retracement. So that's a bullish breakout. This is just little miscellaneous, again, related to that other one. So here's my uptrend, rising 20 above the rising 50. So we're telling little Johnny, in uptrends, look for bullish setups and bullish price action. Here was, a sloppy buy setup, but this square is bullish price action above the 20, above the 50. Bullish price action. Now I have a closing breakout. Snap right back, buy setup. Now I'm getting kind of an M top. This would be a sell setup into this igniting bar. And now again, this is today's subject. This is bullish price action.
That's the igniting bar, everybody. So when you see an igniting bar, it produces a thought. Oh, that was powerful selling, which produces another thought. It's likely that's going to continue to go down. Then we get into the setups. So we're creating a bias. So uptrend is broken, igniting bar down. I believe it's going to go lower. Now we wait.
Yep. Again, I'm extending today's subject, but another concept of ours that I'm pointing with all these arrows is either do I have a tradable pattern, which I don't want to get too far away from today. We're focused on the 1, 2, 3, but also bar by bar analysis. Like, what is this candle telling me of what to think if it sets up in a pattern that I do recognize? Okay, so I'll just do a couple of them here. This gap down here under these 2 red bars suggested lower prices. So that's what we call no follow through. And then at 3 sideways more bars, this is telling us this is a turn at the 50. It doesn't want to go down. This is a little bullish 180, so a breakout failure. Bottoming tail, yep, Greg loves tail. And you should have put one here too, Greg,
Well, I marked you're right, but I marked those because they violated multiple bars of support.
Got it.
consolidation.
Mhm.
You know, where this one, okay, it happened after, you know, going a
Yeah.
red bar, and then it happened in an area of support. So that one is more obvious, whereas those are like, you know, violate 2 bars lows. That one
Right,
violated 6 bars lows, 8 bars lows, whatever.
right.
And so those kind of little tails, even more powerful.
Correct. So this, you know, and when we're scanning charts, when you get a, you know, seasoning, your brain immediately will go to the one or more of the most high probability setups. So my eye, because of this bottoming tail bar, going bullish price action at the 20, think of what a tail is. This was an ugly red bar at the low, and it snapped right back. Now I have a closing breakout. That would have been a great put spread under the low, and more swing traders, you buy over the high and manage in between. 180 reversal, topping tail. See, I can visually see that it made a new high, and then a 180 reversal. So this is bearish, sign of a short-term top, which set up our the sell setup. Red bar ignored is screen. Wide range bar after a little buy setup. So this actually was a 1, 2, 3 also, top under the low. And then that led up to the 1, 2, 3 we traded. All right, what am I looking at here?
Now you're confusing me.
Yeah. And again, you know, these slides I couldn't make perfect, so I'm illustrating a number of things here. So let's talk about it to make sense out of it. So when we talk about multiple time frame alignment, whatever time frame you're trading, you go up one time frame. I have it typed out down here. Don't fade the larger time frame. Fading means don't fade the bias. So remember, our daily pattern was a 1, 2, 3. The weekly was bullish. I'm not trading the pattern on the weekly. I'm saying it was bullish. What I'm showing you now is, what does the microscope of the daily bars look like if you wanted to drop down one time frame, just to, you know, either to get a better entry or as a day trader, and also to take some partial profits. So these, it's hard to see here, this vertical line lined up here is the market open. And this is a 15-minute chart, which means there's 26 bars per day, 6.5 hours. So these rectangles, these first 3 rectangles are showing 3 full days. So remember, the 1, 2, 3, this was my igniting bar. I have it typed right here. This is my inside bar setting up the 1, 2, 3. This is my entry the next day, right in the first half hour. It triggered. So this would have been a fantastic setup for swing trading, which we did, but we also have people that come into our green room and day trade. I think Greg last week was trading the morning and the afternoon session. This would have been a fabulous slide for last week. This would have been a morning day trade, manage it for your trading plan, and you're off to the golf course. So we actually had, I'll show you this in the management picture, but we had such a beautiful big gain. Look, we sold a third of our position just into the close. That was our management. We had such a big rapid open gain, but only a third. It still looked great. And then this was the subsequent, but I'll show you, 2 subsequent daily inside bars, and then we trail stopped out under the inside bars. So I'm showing, you can see I'm showing you multiple concepts here.
I just want to explain for a second, Dan, because we talk about 1, 2, 3s a lot. I'll just give you a little short
Sure.
overview course on it. Is that the one bar, you already know it's a big bar, right? It's a big momentum bar. And so on a short-term basis, it gets extended and you're going to have people that want to sell, take profits, day trading, or what have you. But it's a bar that suggests there's going to be follow through. The number 2 bar, which is here, is a resting day. So it begins to build support. And that's what this did. And not that they all have this kind of an explosive move, but there is a pretty good probability because there was a big move. There was a resting period. It created this support. So that's a breakout intraday, but we call it a 1, 2, 3 on the daily time frame.
Yep. Next concept, relative strength and weakness. If you look up relative in the dictionary, it means you're comparing something to something else. Otherwise, it makes no sense. So when you say you're relatively strong, compared to what? And we compare it to the sector, the broader markets, market internals. And so I'm showing you here, RCL is a cruise line. Here's CCL, and here's the S&P 500 ETF. So let's talk about it. So here's my RCL, the 1, 2, 3 that we traded. There's that big bar that we showed you on the last slide, which is why we sold a third in the string. And here's my CCL. So we actually entered here. So this was a 1, 2, 3 also. And well, that could have been tradable also, but notice we're going to talk about moving averages in a moment. This is another method of how we use moving averages. Notice how this 1, 2, 3 is above all 3 major moving averages. And this one was clustered right here at the 50. And I had a bigger target price void than CCL, which, see this topping tail? It got smacked right into this resistance to the left. So Greg, I'll tee this question up for you. Well, let's see. So 1, 2, 3, 4 bars. 1, 2, 3, 4. So see this green bar right here? That's what the S&P looked like when we bought the RCL 1, 2, 3. So yes, it was stronger. The move from the low here to the low here was stronger than RCL, but this was clustering at resistance. There was no pattern here. It's 100% retracement, no pattern at resistance. So this showed relative strength, both the CCL and spiders. I kind of took your thunder because messed the question up a little bit. But anything to add?
Oh, I mean, this is what when we see something like this setting up, and then this was showing relative weakness, we're assuming it's going to be a catch-up kind of trade. Because many times when something moves a lot, and it could be the stock in the same sector, it's moved a lot, and it's reached, let's just refer to it as a destination. We look for stocks that have underperformed, as long as things are generally still bullish in the broader markets or in that sector. And we look for them that they can continue to go higher.
Now let's talk about, hey, do moving average assist in the analysis at all? Because remember, we can take the moving averages off. And we've been doing MT Lives for over 6 years. So we've covered virtually every conceivable subject, and one of them obviously has been.
And Dan, we've been covering these concepts for 25, 30 years, which just, is a testament to the fact that they have worked through decades. And, we're teaching the similar things, and market environments change. And that in of itself is something that everyone has to get seasoning with, so to speak, to learn how to deal with different market environments, because human nature is a deterrent to our success, because human nature wants security and stability and the same thing day in and day out. If we want excitement, we'll go to an amusement park. But in our day-to-day actions, in our profession, we want stability. And we have to bring that stability to what we do as traders, which is called patience and discipline, to apply our trading plan. Sometimes we don't like that because things aren't happening the way we want it to happen. So it's just adding a little bit of insights as to what you're going to deal with and what could be a hurdle. And if you internalize what I'm telling you, things will get a lot easier.
So, I not today's subject, but I could take these candlesticks off and I can visualize generally what's going on under the hood. I had an uptrend. I got far away, 20 MA curled down, 50 MA is still flat, 200, well, not still flat, it is flat. 20 MA is curling up, which is telling me I had a short-term pullback in an uptrend within an intermediate and long-term uptrend. So our setup right here at the 50 out of consolidation after this retracement is bullish. So that's a plus.
This is a great slide as to why moving average crossovers are so subjective and can destroy you. Because depending on the volatility in the stock or the market you're trading, you could be, shorting at the high and, buying it. Well, no, you want to buy at the low, but shorting at the low and vice versa. Because you can see the cross right there. And now as this would cross back up again, it could be a high point because of the volatility of what happened there. When things are trending, it's wonderful. You say, oh, you know what? The 20 stayed above the 50 and I'm going to stay long as it's above the 50. And, it just buyers step up, at support and things are wonderful. And then, you get into a situation like this and really, market internals, which up here, as I recall, was giving us a heads up, be careful.
Mm-hmm. All right, next, let's talk about volume. Remember, volume and moving averages are secondary. We just see if they can help increase or speed up the analysis or be a plus, like that 50 MA was on the other one. So I write here, let's discuss the price action at volume spikes, igniting or ending, including price during increased volume. So do you want to take it away, Craig? Remember you mentioned this igniting bar? Look at that.
Right. So let's see, is there volume on it? And it looks that way. Looks like there's volume accompanied the igniting bar. And so you might think, well, that's fantastic. I need to see volume on that bar. And one of the main reasons we say that, volume is secondary is because you can get that bar without the big volume. If it's there, fantastic.
Right.
But many times it won't be. But here it was, and it leads us to think it's going to go lower and just kind of drifted up. Another one of the concepts that we utilize, my drawing thing here, is that we want to see the open and close stay in the lower 50% of that bar. Got nothing to do with fibs. It's just common sense that says if this is really weak, it's not going to close up here.
Right.
Because then it would be negating that bar. So coming up into this area and getting this reversal bar is really an ideal setup right there for it to go lower. Mm-hmm. It's at the 50. Well, look, moving averages are subjective. We use 50, 20, 200 on the daily chart. They're simple moving averages. They're not exponential. No need. So it was at the moving averages, and the moving averages provide us a visual representation of what's happening in multiple time frames. So that was a line there, and it was a great little setup.
Yeah, so that this, this red bar was a little breakdown. So this one you covered, just all of these bars combined here are telling me that it was a short-term bottom and then bulls came back in to buy it at cheaper prices, which is shown now here by the 100% retracement. As you said, I don't care about increasing volume, but if it's there, it's a plus. So here's a breakout and increasing volume. So that supports that. But yeah, I mean, we could take volume and moving averages off and just trade candlesticks if we wanted to, but they provide benefits as we're explaining right now. All right, so now we have a compelling setup. We've gone through all the concepts. I'm ready to go. Ready to go where? Well, ready to, and I'm not talking about internals today because I know it'll not. I'm not showing you the internals, but they supported it. They weren't at bearish extremes. Okay. Greg just posted this link, which is this, and it's okay. What's my position size? And this is right out of Greg's seminars. His main, it's in many of his seminars, but it's however much you want to risk on a trade per your trading plan. You just look at your entry price less the stop price, and our stop price on this 1, 2, 3 was under the low of the WRB. And now spit out for you how many shares you buy. And Greg gets into this in the swing course, but it's beyond position size. This has to do with your trading plan about, okay, here's how much I'll risk per trade, how much per day, how much before I stop trading, and what do I do at that point in time. Depends on your experience level, your capital base, etc.
So Dan, let me just add a little something to that. Said, look, when I started out, I'm going to say I'm kind of old, there was no internet. And things evolved tremendously from there, as well as trading platforms. Today, trading platforms are super sophisticated pieces of software that if you're just starting out or you've been doing this a short amount of time, you really cannot appreciate where things were 30 years ago or more. So look, this table here is a starting point for you to say, okay, I'm not sure, unless you're trading the same instrument and volatility changes sometimes from day to day or week to week or what have you. So you need to make adjustments, but you say, okay, here's a setup that I'm going to trade. You could trade one instrument one day, maybe you're trading IBM, the next day you're trading Ford, what have you. But you say, whatever I'm trading today, it's going to need a 50-cent stop, or it might need a $1 stop. So now this gives you a guide as to how many shares you will trade on that instrument on that day. Now, in your software, you have the ability to set up money management tables, or not tables, but criteria. So in the software, and like on mine, I just click that drop down and it clicks, hey, 75 cents. It automatically adjusts the share sizing and it'll put it a stop accordingly to where my calculated loss will be. And it puts a target thing. It's kind of arbitrary because I know where it might go or should go on the chart. But the point is, when I press that button, the amount of shares is going to be done automatically. My stop is going to be done automatically. And I don't have to think about it other than to look at the chart and say, this one needs 75 cents. That one needs $1.50. That one might need $10. So you will share size accordingly, and you can set that up in your software.
All right, great additions there. This is a fantastic slide. I urge people to print it out. When we have MT Lives on trade management, we discuss this in great detail. So I'll just give you the Cliff Note version real quick. On this example, assume it was a buy setup. Today, we're talking about a 1, 2, 3. It's in an uptrend. We're buying the pullback and retracement and reversal on support. That's a buy setup. We're expecting a new high. It accelerates higher. You're going to sell some. We all have struggles with this. You want to take your money, but if it's not near its target, bar by bar analysis, there's no reason to get out. You have to let it retrace and pivot. Once it becomes a major pivot low, that's your new stop. It accelerates higher, bar by bar. Maybe market internals are getting, bearish at that point in time. Then you just go back into trail mode. There's a Cliff Note version on trail management.
So just reinforcing what we said earlier, this becomes a pivot low after 3 bars. You don't know if it's going to be a pivot low until there's 3 completed bars. Then it's a pivot low, and it's obviously taken out this here. So it would make sense to bring your stop under that low. Now, even though this is a wide range bar here, the next bar could have been a down bar, and then another down bar, and then an up bar. Sometimes you're going to sit through some messy stuff. So getting far enough away, right, from what just might be chaotic movements in the short term allows you to hold on to that position.
All right, so how do we play it to this one? What did we do? Well, remember that 15-minute slide that we talked about for a little bit? So we sold a third into strength, made $5 in a day. I remember it was on 2 days later, it gapped up to resistance and started sputtering. And we said, what, take another third. And then we moved our stop under on this bottoming tail bar, stopped out on the third. The cumulative gain was this, as shown here. So not as clean as that buy setup example that we showed you, but your trading plan should have discussed in great detail how you are going to manage your positions, whether they're day trade, swing, etc. This was same chart. Actually, it was a different point in time. So our 1, 2, 3 that we did the directional was over here. So you can actually see in retrospect our kind of tight management paid off. Look how deep it retraced. Now I know Greg's looking at this bottoming tail because he loves tails, and here's a closing breakout. So that was actually a new directional long right there.
Yeah.
And the markets all turn the same way on this crazy reversal day if you go look at the market. But we also sell options and credit spreads on compelling patterns. What is the pattern here? Well, closing breakout of these 1, 2, 3, 4 bars. Look to the left. This was all-time highs. Last week, this was last week's trade. So we sell a put option. What does that mean? When you sell a put, we're taking in money from whatever you sell it for in the option table, and we have an obligation to buy the underlying stock at that strike price on or before expiration. So we sold the 167.5 puts where this green line is. Now you could sell it naked, it's fine, but we like doing spreads because it's less buying power requirement. And if there's a catastrophic gap against you, it's less max loss by definition. So we take some of that money, buy further out of the money put. The difference in those two numbers is the net credit. In this case, we took in 52 cents a share. If you sold 10 contracts, $520 goes right into your brokerage account. But we trade options, we sell options with a technical bias. So Greg, you know I love asking you this. I haven't in a while. Once this traded over the high of this green bar the next day, what do you think the odds of this doing a 180 reversal and tanking? I think this one was 3 days to expiration.
A lot less than when it first began to turn, because the more bars we have, excuse me, and especially when you see a bottoming tail bar, it communicates that there are bids below. So while it wasn't a bottoming tail bar, and I'm talking about, I guess that bar right there, it didn't break below a prior bar's low. It told me that there were people bidding near the previous day's low, and they drove it back up again. So as we gather that kind of information, it tells us that it should not go back down there.
Mhm.
So that's what a credit spread is about. It's like, I see that pattern, I think, oh, that thing's going up. Which if I think it's going up, that means it's not going, I think it's not going down, which makes a credit spread a no-brainer. So with a disclaimer, it's the no-brainer that anything can happen, of course. But as I put together, it held here, it rallied, rather than pulling back, it went sideways with bottoming tail bar. The cumulative information becomes so compelling as to using either a credit spread that it's not going there because it could go sideways, but I believe this is going to go up. So you could do the credit spread and buy the stock or buy a call or do a debit spread.
Right.
So, once you learn these different vehicles to profit from, one setup could say, hey, you know what? I'm just going to do a credit spread here. I'm going to do both. I'll use, options versus the underlying. And that comes with some education.
Yep. And then, manage in between. So yeah, last week we were 12 for 12 in these credit spread trades like this.
That means 100%. Yeah.
That's right. That's right. But it's also, giving them a feel of how many we give. We have a weekly options trader, which all it does is sell options and spreads around patterns like this. And I would say 10 is the average. You know, active, if we nail the turn, it could be 20. But yeah, it's a great little service. All right, Greg talked about this a little bit already. So now we're done with the trade. Okay. So you mark it up. This is part of your trading plan and your seasoning. What did you do right? What did you do wrong? Winning trades are kind of easy when they work properly. Did you execute it properly? Did you get lucky? Room for improvement? I would say a lot of this, where your improvement is going to be, is the proper trail management, because you'll see where you took your money and you'll see the thing go up another $10, whatever. And you'd be like, why did I get out of that? Losing trade, what you could be saying, what the hell was I looking at? I was mirage trading to get into that thing. But let me jump right to here, because this was an actual subscriber of ours who sent this to us, and this is his markup of his own trade. And this is fantastic. I'm not going to sit here and read all this to you, but look at the moving averages rolled over, wide range closing breakdown, sell setup, 180 reversal, two bottoming tails, kerplunk, price void, and now he's in management mode. So this is a good example to go to that other slide about trail management, where we showed you the buy setup. You could apply it identically here, but this one is a breakdown, and you can see your trailing pivots here. And look, he took his last third exit here. I think he managed it perfectly. Look, he said my entry here, he bought a put option. Perfect. And look, he's trailing. I don't want to sit here and read all this. I don't know if he got out of the whole position or took some partial profits. I would have taken some partial profits here, got FAR, volume, etc. But great job from the subscriber. All right, that's the one that we just talked about. That was a beautiful new setup for directional and put spread under here. And that's it. So this is Greg's swing trading course, mastertrader.com/swing trading. He puts it together in these thought building modules. So, I write here, you learn how to objectively trade anything that moves. So you have the conscious competence, I call it, after taking this course. And then from that point, it's really seasoning. From that point forward, it's like anything you try to learn, to be a mechanic, doctor, anything, you need to go to school to get the proper education, and then you start implementing what you've learned in an intelligent manner.
It breaks it down into little bite-sized segments, meaning candlesticks, retracements, moving averages, multiple time frames, money management, keeping a trading journal, psychology, and you can watch it forever. And so the beauty of it versus, years ago when we used to do these seminars on a weekend, is that you got kind of overwhelmed with a tremendous amount of information. And then you can come and do it again, at no extra cost. But you can watch candlesticks. Then, tomorrow you could listen to money management and so on. Spend an hour, a half hour, 15 minutes, whatever the section, rewind it. So this is so much better than the way it used to be, because, they're recorded and you can watch it over and over again. And so, repetition is, what we all need, because whether it's printing out charts each day and putting it in your journal or making notes, it's just it's like becoming like Pavlov's dog, in essence. And we're never going to be that way because our brains don't function that way, but we have to be focused on that repetition of the thought process. And that's why I think people gravitate toward red light, green light things, because it does take more work to think. Duh. So look, you start doing this and you say, okay, retracement, momentum is slowing. It's at resistance, and you start putting it all together. And so I just want to reinforce that, is that it's a fantastic way of learning, because it's at your own speed and you can watch it over and over and over again. Yeah.
All right,
You
let's
have
take a look
like
at the market.
DVD series, Kim. You've been around a long time if you got those DVDs.
Right.
Yeah. All right. I don't know if you want to look at a few charts, Dan, but
Absolutely, we do. We always do. Answer any
yeah.
questions. Like they'll give you some symbols that I haven't looked at them in 90 minutes, but here I'll give you a couple here. PM
So withdrawal.
PM under the low is a short.
Which one are we looking at? I got all these windows open. I don't want the screen.
Here's a couple long ideas, and that's enough. PM short, the others are on my long watch list.
All right. So let's look at one chart. I got the broader markets down here. I can just, flip these to if I wanted to look at all 5-minute charts, I can see what's going on there. So I dropped the link in there about I'm going to be doing a presentation this month, a couple of weeks. Get signed up for that. You'll love it. All right. Anybody want a little COVID virus action? Went to the moon. Now nobody wants it. They're probably being sued. ACN. Nice, beautiful uptrend. Moving averages are facing up, 20 above the 50, above the 200. We got to look to the left. Does it have room to go up? That tail, what's up with that little hesitation there? But it's holding up and it's doing well.
Yeah, to me, it looks like an earnings gap and yeah, just consolidating.
Yeah. I'd love to have one of those bottoming tail bars. It's like my bread and butter,
Yep.
you know. Bar breaks these lows and comes back up again. So I like it, but it's not ready yet, and it could go and leave me behind. But if I had one of those, I have
Mm,
an very high level of confidence in the setup.
Yep.
Yeah.
Ryan's another one, but
This
yes.
this is kind of there, right? It broke and it's turning back up again. I like that.
W,
It's near this resistance, but patterns like this, and in addition, if we talk about the sector of technology, this is showing relative strength to XLK. And this is something that could make new highs. So I like this a lot. Um, WDC.
so it's
So here, relative weakness, but it's
right.
turning. The other one is stronger, but this one is in an area where I know buyers are going to show up. Basic concept. What was resistance should become support. So it just gives me a guide as to my thought processes. This is where buyers should be. Today isn't over. So I don't know that that's going to be a green bar at the end of the day. There's still several hours to go, but it's a good start. EMR, that one,
Yeah,
I
pull.
don't, yeah,
Nah,
it could keep going, but I feel like should have been in it already.
yeah, no, it's at that prior high too. I don't like it either.
Yeah. MU gapped up on earnings, surprise. It's pulled back a lot. Not green, so it's not ready yet, but it should be getting ready pretty soon.
I would love one more bottoming tail.
Yeah. AMD,
Uh,
not ready yet.
uh,
I mean, just think of semiconductors. That one's better.
right.
Big red bar, big green bar.
You see Deepak, the difference of those two? This
Yeah.
one's 180.
180. Huh? KLAC usually moves with that one. That one may be a little better, a little stronger. But, it went down and it went up. All right. Looks good. SMH, we could look at, looks good. So on a short-term basis, instead of trading this, I'll trade this. So it's leveraged. So forget the moving averages. When you're going to trade leveraged instruments, you always got to look at what the underlying is that it's related to, because the leverage is going to skew things. But it'll go up. It's got to go up. If SMH goes up, it's got to go up. Ryan, RYAN. Beautiful. 1, 2, 3. Pullback. The wide range bar. And let's look at this. Let's look at this. That's the weekly, but let's look. Here's your momentum move. Right? Look at it highlights the bar on the daily time frame. That creates the void. This is the resting period. And when we looked at the slides, Dan showed 15-minute charts. So it's all erratic and whippy. It's not as tight as the example that was on the slide, but the concept is the same. It's whippy, but it's getting tighter. So but keep an eye on it. It's a little it's not a narrow, wide bottoming tail bar, inside bar. So I wouldn't put it like as a no-brainer, but look, it's strong and it should go up if other things are going up. It's an insurance company. So one of the things you could do with this platform is say, hey, you know what? I like this particular stock. Let me look at other stocks that are doing the same thing as this. And now I can now start looking for those and saying, hey, I'm not seeing anything that matches. There's Ryan. Still kind of sloppy. So as we're looking at these, there's a wide range bar. I could sort this by what's the strongest and go to that and say, well, that's strong, but it got beaten down. That one's, so I'm looking at these stocks and I'm like, that's about not great, but about the best looking one. There's my bottoming tail bar. There's another bottoming tail bar. There's an inside bar. So if it takes out those highs, so by the way, we could look at other things within this platform where there are scans. You know, there's gaps. We share this with subscribers and students. You know, there's, you know, finding gap trades is pretty easy. You know, I mean, they're there for you to go there and look through. Let me just go back here. So outro. Oh, go ahead and play. You want me to play it, Dan? Go ahead.
No, I will. I was just telling you 1 o'clock, but wow, look at the volume. Remember we told
Yeah.
you, look for
Yeah,
volume
yeah.
spikes? Wow.
Yeah. Yeah, there was some nasty news on this. And look, you might think, well, what if I own that? Well, I would say, you know what? If you own this after this day, you need to get your head examined. This thing is in a downtrend. It's breaking down. You do not want to own this but now it's like a climactic, maybe an exhaustion gap. The bad news is out today. And so this might begin to start rebuilding, and you could look at longer time frames and look to the left. I don't think we said that today, Dan. Look to the left, but look at where it gapped
Let's
down.
get to Master Trader Live. If you like the show, we invite
I
you
hope you love this. Share Master Trader with friends, and we'll be back next week. All the best.
Analysis or lesson sent right to your inbox. We're live every week, and you can subscribe to the channel and press the bell to get alerts. If you've enjoyed the event, please give us a thumbs. Just visit mastertrader.com. That's mastertrader.com.